What is up, everybody? We are back with another episode of Bullish's Top Stocks to Watch for the weekend. Why? Before we get into it, as always, hey, these are only my opinions. Do your own due diligence. These are things that I'm watching, not necessarily playing, but I wanted to at least show you like what I'm watching, but more importantly, why I'm watching it. Right? If you agree, great. If you don't, hey, let's have a conversation. Let's start a discourse about it. Also, hey, number two, give me a follow here. Give this a like, subscribe on YouTube. Also, real underscore bullish wherever you get your social media poison. I'm pretty active on Twitter, Instagram, stock twit. So go follow on there for just let's stay in touch and talk some shit. All right. And also realbullish.com. Go sign up for our newsletter there as well. Go get some merch. I don't have my shirt on right now. I should have put it on, but sure looks good. Go buy some merch. All right. Hopefully you can see my screen. But before we get into it, hey, a couple things of news. I might be changing this show to more of a bi-weekly, kind of changing the format a little bit. I got some stuff that's coming up like that I'm going to have to spend a lot more time doing. So I'm trying to see how I still want to do the show because it definitely helps me. So I'm maybe doing a bi-weekly, which I think means every 2 weeks, or maybe like a smaller show, like in between during the week where I don't have, a bigger episode coming out, just because it does help me. And I really I enjoy doing it. I enjoy doing the work. I'm a nerd. I enjoy sitting down, reading shit, looking at numbers and stuff. It's fun for me. So it's kind of therapeutic in a way. And if you make money, that's also good too. Also, some other things, kind of more market related. The FOMC had some notes that from December, the December meeting. So the notes were a month old basically, but they still kind of rocked the markets a little bit. Basically, being more hawkish than originally thought, and saying, hey, we might be two things that I took away. Hey, we might be increasing the rate sooner than expected, but also all these bonds that we purchased, we're going to have to find a way to liquidate them. So they're two really, really bearish things, hawkish things. So you have to take that with a grain of salt. Also, the bonds, the Treasury bonds hit 1.8%, the highest part since the pandemic, the highest bond yield since the pandemic. That was on Friday. So you kind of have two things working against you. If you're in high growth, you have the bond rate going up. And I actually posted this on Twitter, so go check that out. It was a really good article from Barron's on like how all these things are connected. So how the interest rate hike increase hits the bond yield, how the bond yield and the interest rate hikes and inflation hit growth stocks and shit like that, and why we almost see a turn to value-based investing for the most part. But anyways, I'm going to go into it. I'm pulling one back out. I call this it's called GRIN. Hopefully Grindwall, I think it was Grindwall. Yeah, there you go. Grindrod, sorry. GRIN. Hopefully you can see my screen. But basically, I've been calling this out for a few, basically for like 3.5 months for this opportunity here. I called it out, I think, original episode 34 and 45. So last episode, or 46. Go check out the last episode to kind of see what I was talking about, but also go check out 34 for why my original bull thesis is on this. I'm not going to go too far into it. Suffice it to say that this is an interesting play. It's one of it's the on Seeking Alpha. It's the number one of 23 in the industrials marine industry, right? By quant rating, right? So super bullish. Seeking Alpha, which I love. They have so many good articles. They have so many good financial information. You can go in there and just dive into companies, which I love doing. This is one that was on all of their thousands of stocks. This was number one for a while. I'm not sure if it still is. I think it's in the top 5 still. But anyways, I was watching this for a cup and handle formation. Hopefully you can see my screen here. But basically, this cup and handle formation started, 618, right? So we're looking a few years, like 3 years ago, let's say. Maybe 4 years ago. What is that? But anyways, 3.5 years. But basically, this was a long cup and handle formation, which I really love. But basically, what I was calling out was this area here of breakout, right? We did see, so that's at the month level. It does look, even though we are at the break of this, if you see this, the lip of this cup on the top, it broke over and it's holding over it, so that's what I wanted to see here. I wasn't going to follow this too far down. If it breaks, you kind of, if it breaks under your formation, you have a stop loss and you get out, right? Or you hold it for the play on the upside, right? But what was interesting to me is that at the month level, even though it is at this break, it's kind of stalling out a little bit here, right? But like I said, this is a month. This took years to form, so you're not going to have this formation form overnight for the breakout, right? If you look at it in the week level, which I should have done a better job of last week, but I did notice was even though we do have a cup and handle breakout, it almost looked like another cup and handle in this cup and handle. I've never really seen that before, but so I wasn't like when I saw it, I was like, oh, that's interesting. But so it looks like we have the end of the cup and handle into another cup and handle. But what would you expect with that? Another handle, which you did have a breakout here at the week level to the downside after this break. but then it popped back over this 1770. Let's call it 1777. That's the 18 buck level, right? It still popped over that, which I've been looking at. But more interestingly, at the week level, you do have MACD. MACD hasn't been bullish at the week level for 3 months now, and now it's really starting. You see this little green kind of MACD candle starting to form right here. Wants to start popping, but you do have a lot of selling pressure. Interestingly enough, though, and why I'm kind of still bullish on it long term, well, for the foreseeable future until it breaks it, is you do have an upward channel that started basically for the past month or so, where it's making a series of higher lows, which is overall bullish in general. And it's still, even though we did have some selling pressure, it never broke. It did break under this area of breakout, but it's still holding, which I really enjoy about it. So I think that grind could be an interesting one. Like I said, there's a really simple formula for looking at your price target for a cup and handle. For this one, I think it's like 34, because you take the bottom of the month, you lay it over where the breakout was, and then you layer that difference on top of the breakout, and that gives you about 34 bucks. Like I said, I wouldn't chase this one too far down, but I do like it because Seeking Alpha has this as really bullish. And when you look at the industry that they're going after, it's not too expensive, of a company for the price to earnings ratio. Because right now, high multiple price to earnings. So if you're like 35, 40, if you're trading at price of sales even, so no earnings, the market's kind of like hitting you, right? But for this one specifically, it's not too bad. Let's see. Also for this one, yeah. So it's actually down about 0.89% on a trailing 5-day basis. But if you look at the SPY in general, it's down one. The whole SPY industry is actually down almost 2%. So it's still it's not strength, but it's not weakness, right? So I think if we get some market, strength, it could be very helpful. Looking at the SPY is the other one I wanted to look at. So the SPY specifically, like I said, it's down 1.8%. So this is SPY. This is following the S&P index overall. And it's down 1.8% over the trailing 5 days. We've only had 5 trading days of 2022 so far, and it's down basically 2% over that time. And when I look at it, and I've called this out for basically 3 months now, these important areas, I call out this 270, and I call out this 470 and 453 areas. And right now it's kind of in the middle again. So we're kind of still in that trading range. At the month level, though, I zoomed in a little bit too far, but at the month level, you do see a kind of double top here. RSI is going down. MACD is still kind of flat. So at the month level, this is like a really mixed chart for me. It's not great, it's not bad, but it's what you expect. At the week level, you're seeing a little bit mixed as well. You do have a hitting channel support that started basically, for the past 3 months. You've had like a series of, higher lows in terms of the week level, but still RSI is kind of pointing down. MACD is kind of flat to down. So it could be another interesting week where we test the bottom of this channel again, and then maybe even see a test to 453, which I am a fan of, because if it bounces at 453 again, hey, support is support until it breaks, and that's what I'm looking at. But I love to look at SPY, QQQ, and the DIA daily, if not weekly, one time at least, to see kind of what the market's doing. So I'm not kind of taking, under it. So I wanted it to hold this 470 area. It didn't hold. It was, like I said, the FOMC meeting notes came out, and the market just was looking for a reason to sell off, honestly. But with earnings seasons coming up, banks start reporting this upcoming week. That's the start of earnings season. It could be the catalyst we need. One way or the other. Right now the market's flat. It could be a catalyst to the upside or the downside. But I like SPY again. Catching the bottom of this channel. Worst case scenario, hitting this 453. And if I see an interesting day where it starts bouncing off of these levels, I'm gonna just get deeper into SPY, right? Because like I said before, if you're betting on SPY, you're betting on the long term bullishness of the American economy, which I'm a fan of, even though right now we're in a more of a correction. I'm not trying to buy every dip, but I'm trying to buy dips where it's smart and I have like dry powder capital to do it, right? Another one I'm bringing back is Coin. Sorry, I'm not being lazy, but these are ones that I'm still looking at as being interesting. Coin's another one I'm looking at specifically right now. So there was an interesting article on 1/6. So that 1/6 was basically this past Thursday. Bank of America upgraded Coinbase with a price target of $340. Go back to episode 45, 46, my original bull thesis of Coinbase, right? I have a lot of things I've been talking about it. I'm still watching this, still kind of bullish on it. Specifically, that Bank of America kind of call out was, this is what quote from it: subscription and service revenues made up 12% of the total net revenue of Q3 2021. So looking at the last quarter that they reported, up from 4% in 20, right? So of the previous year. And Bank of America forecasts will account for 60% of total revenue in 2023. So they're growing their subscription and service revenue, right? Kind of like that tangential add-on vertical for the company, which is always a good thing to see. Finding other areas to build revenue versus just kind of fees and stuff like that, which I'm a big fan of. Finding other verticals to kind of generate money, right? And just looking, so I was like, oh man, I just anecdotally, I saw a lot of upgrades for Coinbase over the past few months. So I looked actually for the past 2 months, I saw 4 upgrades over the past 2 months and 0 downgrades. The average price target of the upgrades over the past 2 months is about $393, right? So analysts are looking at the company, and it's still like this has only been trading, basically since 4/12 of last year. So it's still new, so it's still speculative, but also I think there's a lot of value there. I will say that over the trailing 5 days, Coinbase is down almost 8%, but that's also lowering its PE. You look at Coinbase, you think it's a very expensive company. It's actually not that expensive. They have a price to earning ratio of 16.61. The SPY in general is at 21, I think it was right now, maybe 2021 in general. So your price to earnings ratio for Coinbase is still below what the SPY is at. And we've had a lot of really bullish price target increases coming from these analysts from big reputable companies. Bank of America is not like a small company. It's a huge company that does this for a living, right? So it's not too expensive. But you do have a couple headwinds working against you. You have two things. And the way I look at it, you have, you have basically a Kathy Woods sell-off. So Kathy Woods in our RKK fund, this is, I think, the fifth biggest holding in her group of companies. It's like Tesla, Coinbase, fucking Teladoc, Roku, Zoom, right? And those trade at like triple digit. So whereas Coinbase is at a 16.61, 17 price earning ratio, these other companies are like triple digits. And then like I think it's Teladoc is trading at a price of sales. They don't even have fucking earnings. So I think this is unfortunately getting caught up in the Kathy Woods high growth sell-off. Even though Kathy Woods owns a big position of Coinbase, it's actually the company in that portfolio of ARKK that is super low value compared to everything else, right? And also crypto has just been weak. I think the canary in the coal mines is Bitcoin, and that's I think $40. So it's 50% regression from the highs of the height. So it's kind of getting a double whammy of a hard market. SPY is just down 2% over the trailing 5 days. You have Kathy Woods growth sell off, even though this is not technically one of her high multiple growth names. It's still getting lumped in there. And you have Coinbase, right? So being early is still like being wrong, but I'm still bullish on this long term. If you look at the charts though, at the week level, that's where I'll start, because honestly, this hasn't been trading for so long. So there's not a lot of indicators here at the month level. Like I said, you only have a few months of trading data here. So you don't have any kind of anything at the month level, but at the week level, you're starting to get data here. You have RSI pointing down, you have MACD going down. So at the week level, still is very soft, but you have an important area here. The upcoming is, let's call it 223 and 212. That can be interesting. It's never traded below 212. I hate buying companies making new 52-week lows, but at the same time, I think this has a lot of value. You don't want to like be a hero and buy the dip, but you want to watch to see where it's going to start taking off. And with all the bullishness coming for Coinbase and the value that's coming in, if you're bullish on NFTs and they're going to have their own NFT marketplace, if you're bullish on fucking crypto long term, this to me is a really interesting way to play that. But I want to see it start breaking out of this downward pattern, and it's looking like it's trying to start getting some footing at these lower levels of support, right? So that's what I'm looking at. The other one I'm looking at is XLF, and I'm sorry, I'm going to try to do this in 20 minutes or less. I'm at 13 minutes now. Let's fucking go. I had too much coffee. I had a pre-workout, I did legs, and then I have a coffee now, so I'm fucking going. I need some water, actually. I'm dehydrated as a muv. Okay, so XLF, their earnings season kicks off with banks, like I said, on 114. So that can be the interesting catalyst to the upside or the downside that we need to get out of this meandering trading range that we've been doing across the SPYs and the other indicators. But XLF is basically an ETF tracking financials, right? And I actually did. I do my research, guys. Like, this is shit. This is just like a week's worth of research, right? So XLF, their top 5 holdings are Berkshire Hathaway, JPM, BAC, Wells Fargo, and Morgan Stanley. 2 of those companies are reporting. So JPM and Wells Fargo are reporting on 119. Then you have 2 more reporting the next week. And then you have the Berkshire Hathaway expected to report the early February. So it's going to be an interesting catalyst time for XLF if you're interested in banks. And I am, because you have an interesting combination of things that are happening, right? You have inflation and you have higher rates coming up. Both of those are very bullish for banks because when you increase your rates, generally the banks can make more off of their loans. And when you have inflation, you want to look for money now versus money in the future, right? So you want the lower value or price to earning ratios because you're getting that money now. Also, you have pricing power, so the banks can like price what they want to price, right? So banks are an interesting area to me for the higher interest rates and higher not transitory, but maybe more permanent inflation and transitory, right? Also, the XLF, if you look over the last, basically over the last year, it's up 33% versus 28% for the SPY. So it did outperform the SPY, but like I said, with rates going up and inflation here for the foreseeable future, you could see that as a really interesting tailwind, a catalyst for these banks to outperform even more. Even with all that being said, up 33% the last year, they're still at a 13.8 overall price to earning ratio. If you look at all the holdings in XLF, all those financial holdings, they're still under a 14 price to earning ratio forward, right? That's not too expensive. Like I said, the SPY is at 21. The one we looked at last week, XSD, the one that was tracking the small cap semiconductors, was at 23. So this is still under those, right? So there's still interesting value there, right? And like I said, the top five. So I looked at the top five holdings. I'll name them out again. The top five holdings in order are Berkshire Hathaway, Series B, JPM, BAC, WFC, and MS. Those have a 4 point. So if you average those top four quant ratios, in Seeking Alpha, they have a 4.04. That's bullish as fuck. It only goes up to 5. So I like to look at play, and I like to look at ETFs that have a lot of value and great companies in those top five holdings. Those top five holdings approximately are 36% of the total holdings, which is a good standing for me. Last week would have probably been a better price to enter, but at 41, I'm not too mad because this also plays dividends, right? So you're having dividends, you're having earnings, you're having some value there. But if you look at the month level, this thing is not too far extended. It was at this interesting trading range. At the month level, I'll zoom in a little bit. You do have RSI going up, but at the month level, it is an interesting area. Like I said, 70 and 30 for the relative strength index or RSI. This middle area, it only goes to 70 and 30 are two possible areas of corrections. It's at 70. So it's approaching 70 right now, which is basically at the cusp of it, 69.03. You have MACD kind of like still going to be bullish right here. It's not pinching yet. You do have an interesting pop over this last area. You have a really strong month candle right now. This month candle is strong as fuck. And I like XLF a lot because at the RSI level, at the week, it's still going up. Like I said, you are getting close to this 70 area, but if you look at previous relative strength index, it can go to 82 and not blink an eye. So right now, it's just getting started, in my opinion. And also, you have MACD that's about to start pinching to be green, right? You haven't had a green since 3 months ago, right? So right now, it looks like it wants to pinch to be green. If it can hold this $41 area, right, and you see a strong green candle coming out here, if you can hold this area, I really like it for the long-term hold. Like I said, I'm not looking for banks short-term. I'm looking for them to 2022 because they have that combination of pricing power. They can fight. They love high interest rates, and inflation, doesn't hurt them as much, right? So I really like those plays there. Like I said, last week might have been the best week to do it, but I do like if it can hold over this 41 area at the day level. At the day level, it's still bullish. You have 2 solid days of volume over average. You have RSI going up, MACD still going up. So all of these, I like time frame continuality. Shout out to the Strat on Twitter. Follow the Strat; they're really good. But basically, you have month, week, day level, all looking to the green side. If it can hold over this area, I really like it. Not too expensive, like I said, under 14 price earning ratio. And the shares are like $41. Fuck you, just buy a few and get into it. You know what I'm saying? The other one I'm looking at is XLV specifically. I called this out a few times. I think I called it out. Yeah. Basically on this week here. Let me just go into it real quick because I'm trying to do it 20 minutes or less. I called this out originally around here for the pop and break over this. XLF is basically an ETF that's tracking the sectors of. I think I have it written down somewhere. They have it written down. Do I have it written down? Yeah. So their top 5 holdings are UNH, J&J, PFE, TMO, and Abbott Labs, right? So that accounts for 33% of their total holdings. There's a JP Morgan conference this week. I think it starts Monday for the medical industry, and that can be really bullish for this XLV specific ETF, right? That tracks healthcare, right? I really like this one as well. It did get caught up in a massive sell-off. So as opposed to XLF, which has that time frame continuality to the upside, this one is actually kind of to the downside. But as long as it can hold this channel support at 132, let's call it, and that horizontal support at 134 ish, if you can hold this area, I like it. I'm not exactly sure what the sell-off was for. I didn't find any news that was kind of like, a startling, so this could just be kind of like a sell-off for the chart or people taking profits. But I think this can be an interesting one with the catalyst being this upcoming, over this next week, the healthcare, I think it's a JP Morgan healthcare conference, right? Which is usually a boom for this because all these companies start reporting, they show their guidance, they show what they're doing, and then like analysts get really excited about it and start increasing or decreasing price targets, right? But for XLV specifically, they have the top 5 holdings, they're great companies that have a low price to earning ratios. So I'm really into this one as well. I want to see though if it can catch the bottom of this channel that started, 3 months ago to see if it can hold this as well here. But yeah, I like this one as well, XLV. But like I said, it's a little bit the opposite. It is making higher lows though. If you look at the day level, you see a low like 1013 that week that we're looking at the week level, a low. This low is a little bit higher. Now, if it can bounce at this area, that's overall a bullish trend because even though it is making higher lows, it's making higher highs. So if we can get a bounce in this area here, which I'm really interested of, with this catalyst coming up and with healthcare being more prevalent as a need for us, as you have Omicron, you have whatever, you have the cold, you have flu, people are getting more health conscious, in my opinion. So we can see what's going on there. But okay, I'm going to do it 20 minutes or less. Like I said, I promise. We have GRIN, we have SPY. I got some coffee. We got some coin. We got some XLF for the earnings coming up. Earnings season is just about to start. Let's get it. And we have XLV. Everyone have a great week. I'm going to take a breath. All right, peace.